This is Don DeBartolo, a senior commodity broker with Daniels Trading in Chicago. I'm also the publisher of the Trade Spotlight advisory service. Trade Spotlight is broken into three segments. You have the Trade Spotlight Futures, Trade Spotlight Commodity Options, and the Trade Spotlight Future Spreads. This is Beyond the Spotlight, a video that'll spotlight two or three markets that may become trading opportunities for the week ahead. The week in question begins with Monday, May 13th, 2019. Before we review the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick preview of what the Trade Spotlight advisory service looks like. It's an email service delivered directly to your inbox. You'll have the timestamp so you know when the trade recommendation was sent out, a write-up explaining the thought process behind the trade recommendation, a chart to click so you can view the specifics, the precise entry order, and stop loss and target, or in the case of an option like this trade, the risk reward parameters of the trade, any margin requirements, expiration dates, vital information needed will all be in this email. Okay, let's jump into our first chart. This is the June 2019 Swiss Franc contract, and through the Trade Spotlight advisory service we were actually already long. We were filled on Friday, May 10th on long entry. It was a break of this trend line here, a break of that and a break of this session high. The session high goes back to May 1st, 99.20. So this was a momentum entry technique. That is a break of a pivot point, high or low, with momentum. If you take a look at the stochastics indicators down below, there was a spike up in momentum on this big bar day. So purchase the contract on this breakout bar here above this session high. I bring this up because there's a potential for the market to pull back. You can see the close was 99.08, so it's a little bit under the entry price. So on Monday, there's an opportunity to enter this position long, still at the same price or even a better price. Stop loss is currently below this session low here, that breakout low. That was 98.48. Was that low? Well, that's what the stop loss is, 98.48. That low right there is 99.50 that I've highlighted. Upside target was these two lows. This was part of that inverted head and shoulders formation from last month, 2 months ago, using this as a potential resistance level. So the target is working at 115 currently for this position. The next chart here is the June 2019 30-year bonds contract, and you can see I have a head and shoulders formation. This left shoulder here, that session high is 148.03 from January 4th. This 12-month contract high was put in on March 28th at 150.21, and then as of late here, the most recent high is the May 8th, 149.06 high. So the market potentially may trade higher into this level as long as it doesn't take out this 12-month contract high. We have an inverted head and shoulders formation in place. This is a trend reversal formation, so I'd be looking for a downside trade. Right now you can see the 20-day and the 50-day moving average are still angled upward. What you like to see is an angle downward plus this 20-day moving average crossing over the 50-day moving average. That's a bearish signal, so waiting for that at the moment. You also have two lower trend lines drawn off down here. Ideally, a break of one of those trend lines triggers that downside entry as well. The MACD right now is flat, and it's showing a little bit momentum to the upside, although it's waning at the moment. So this is a market to watch for this week. If that right shoulder is firmly in place and we start to get a hook over with the moving averages and the indicators, that's going to set up a sell entry. So stay tuned for that. The last market that we're going to look over today is the July 2019 coffee, and just looking for an opportunity to to get long this market. It's been in a massive sell-off going back to the top of that trend line right there. That high is 112.85 from February 1st. So you have, 3 months of just big sell-off all the way down here to the 12-month contract low. That 12-month contract low is 87.60. So looking to see if that's going to be its floor. You see there is momentum to the upside, and the MACD is showing a potential upside move or change in the trend to the upside. I'd like to see a break of this trend line drawn off. There's a handful of touches up in this level. One more at this pivot point. That session high is from April 4th at 99.40. There was one breakout right here, so the more conservative trade is to buy in a break of that session high. That session high is 95.10. Though with the market down here at 90, you're giving up 500 points, but you'd like to see some confirmation. Either a close over this trend line or this 20-day moving average, which is starting to turn up, hooking over this 50-day moving average. Now, upside target could be a 50% Fibonacci retracement of this sell-off here, which puts it at 110. Potential stop losses would go below these recent lows. Just depends on where the breakout occurs. But another market to keep on your watch list for this week. So if you're not following the Trade Spotlight Advisory Service, I encourage you to do so. Just go to the Daniels Trading website, click on the Advisories tab, and then under Technical Indicators, select Trade Spotlight, where this page will pop up and you can view samples of each segment. You can click the orange button to subscribe. It's a free trial for 90 days. That should give you enough time to see what we're doing. After 90 days, it's either $99 a quarter, or if you're a client of Daniels Trading, it's a free service for you. So just contact your Daniels Trading broker. Thanks for listening today, and happy trading.